Short lesson coming right up today. I want to get right into it without wasting any time and break down the game plan for the upcoming day in the market, which is going to be Tuesday, January 13th. We're going to recap the moves from today, get into the setups for the broad market and the individual names. SPY and QQQ is where we always start when we are breaking down our swing trade setups. And looking at SPY, the S&P 500 pushed into all-time highs today. We broke out of the range from Friday, and we put in a candle of about $4 to $5 to the upside here. Continued our bullish trend. Bulls are in clear control as we break out of this ascending triangle look, and the constructive nature of the market is still intact. So nothing to trip out about. Let the bulls, do what they can do here with this short-term run. And in a uptrend, we look to be buyers on dips, okay? Tech lags just a little bit as it still tries to break this key 628, 630 level on the chart. Above the 630 level on the chart opens up to fresh all-time high prints for the tech sector, which would be around 635 on QQQ. So again, anything dipping down here above 610 is nothing to trip out about. It's constructive, and you want to be buyers on dips in an uptrend, and that's what we've got right now. Above 630, this thing could open up for a for a brief continuation run. Getting into the individual names, starting with NBIS group. Of course, this one's been on watch for multiple days, and today we broke that key level we've been talking about, which was the 103, the 104 level. And we broke it today around 10 a.m., and we just pushed all day past that level. So, what do we want to see here? Ideally, we'd like to see this thing build a little bit of a base between 107 and 100. We'd like to buy this thing on a retest of that key level of 104. I don't know if we'll get that. This thing's got a head of steam, and it's headed for that next resistance at 115. So, and study this pattern. This was a beautiful breakout pattern. We call this a head and shoulders reversal pattern, right? A head and shoulders is characterized by a left shoulder, a lower shoulder, and then a right shoulder. And then volume expands as we break out of the right shoulder and we reverse trend. So we need to see volume continue. It was good today. We need to see volume expand on this breakout. Something similar to this November to December range that you see right here in these candles and how they printed. So do I think this trade's done on NBIS group? No, I don't think so. It's just make sure that your risk reward is aligned and you're targeting that 115 without risking too many points to the downside. Good trade on NBIS, just a beautiful look to start the year. And this is what we want to see. January, we're only 2 weeks in, but in my opinion, we've seen more constructive moves than we saw throughout the entire months of November through December. So that's why patience pays. That's why it's so important that you sit on your hands when those setups aren't emerging. And when they do come through, we're fresh and we're ready to capitalize. Intel, we had that inside day today. We call it a doji candle, where we just basically stalled between that big green candle on Friday. And that's fine. That's perfectly healthy to see as we construct here and we build this tight little leg up, and we're curling for this all-time, this 52-week break. Above the 52-week break, and we have upside to that key psychological number of 50. Round numbers tend to be, they work similar to magnets in the stock market. That's at least what I've noticed. It's when you see a stock getting close to 100, getting close to 200, 50, 25, those round numbers act similar to magnets, to where a lot of the times you'll see them just continue until they reach the bids at those numbers. And Intel, I'd like to see it stall again, maybe hold the 42, and maybe build a little base there at 42 and 41 before it works its way up, curls up, and tries for that 50 push. Still holding on to my position here. I still like the look on Intel, and I'm riding the theme. ALAB, moving on. A big winner today. ALAB finally broke out of last week's range, and it did so with a strong move, a convicted move. A move that was no doubt about it. It was strong all day today. Okay? And this is that 50 EMA compression. I wanted to take just a little bit of time on this setup right here and really break this down. For me, this is a, when I see something like this and I don't have quite the position that I really feel I should have had, years ago I would have beat myself up over that. Now, here I am. I've figured out what works for me in the market. I figured out what doesn't work for me. And beating myself up over missing a trade, there's no reason to do something like that. It doesn't provide any benefits. There's so much opportunity in the market. Missing one trade, it's not going to make or break you. Making one trade, missing one trade, it's not like it's going to have a huge effect on your overall career. So what's most important, though, is just bouncing back, okay, and then is looking forward to the next trade that comes up and making sure that you capitalize on it, and then learning from the experience. I learned here that this one was ready to get a position. These 4 days in a row right here, 1, 2, 3, 4, these 4 candles that were creating smaller range as they compressed into 50 MA, it's time to get a position when you see that, okay? But ALAB still looks very constructive. The real trade here is above 180, up to 200, could happen very, very quick, very rapid. On ALAB, it's got an explosive look. So for me, emphasis on getting a position, emphasis on protecting my risk and not chasing, but also emphasis on this setup right here, this overall continuous higher lows being put in, constructive nature around the 50 MA. This is exactly what my model is centered around. So ALAB, I'm looking to capitalize on dips, positioning myself for the 180 test, risking below 150 and the low of this group of candles from last week. Moving on, guys. ASTS. This one really shaped up well to end the day today. We put in an inside day on this high and tight ascending triangle. This one is really starting to get, for me, it's center of attention going into tomorrow. Let's see if we gap up to that 100 and we look for that potential blow-off trade of 10 to 15 points to the upside. It's got that explosive look, dips down to 90. I will look to add to my position on low volume washouts into that $90 level. Really good looking chart. The way the market's been moving, things have been pretty hot last week. So this one's got to come to the forefront as a momentum trade with breakout potential. ASTS. CCCX, this one, for me, I actually did trade this today. I took a loss on CCCX. I like the ascending triangle pattern. I said if this thing opened up around 1825 or 1850, that my eyeballs would be on it, and I expected other people's eyes to be on it, and that just didn't happen. It just didn't pan out. It made a run this morning off open, and I bought it when it pulled back just slightly bit, just a little bit. I bought it on a pullback, and it just continued to pull back. So it was a stress-free trade for me. I was able to set my risk on it and actually just set a limit order. I didn't even watch my stop get hit, but my stop got hit, and it was a small loser, but no, nothing crazy. I like the look of the ascending triangle. I like the volume that was starting to inject, and today it was just a dull candle. There's no way around it. It was just a dull candle. It didn't print. And I'm on to the next trade. CCCX, tomorrow we've got to see some involvement in this name, or this one starts to lose construction. We've got to see some volume. We've got to see a bounce back and keep us up near that $19, $20 level, or this thing loses momentum. DJT, same way. Likewise with this one, right? We start to lose momentum, drop below the 1350. Again, I'm not riding this thing out to see if it holds up after that. It'll lose momentum. It loses its constructive look, and I will reevaluate if that happens. Still positioned in it, but I'll reevaluate if it dips more than a few percent tomorrow. FLY was a strong one. High and tight, continuation. Today's candle it was inside the range of the previous day. That's a explosive looking setup right here at this key $30 level. So FLY, if you have a position, great. It's strong looking. I would want to hold on to at least a portion of my position until it broke into that 32.5 and potentially rode some up to 35. I would be risking around $24 on this to the downside. Keep your risk a little bit wider. And reason being, we've had 1, 2, 3, 4, 5, 6, 7 consecutive green days. After 7 consecutive green days, almost a week and a half of market time, it's only healthy that this thing retraces a little bit of that move. A portion of that move retraced down to $25, and I'm a buyer on FLY for a continuation to the upside. That's all I've got for the watch list today. We've got a few small caps positioned in there. We've got the broad market we touched on, and then we touched on a few $100 to $150 stocks that have been moving, and the options have been paying if you've been in some of these. It's been a great start to the year. And just a reminder, what I trade, right? What patterns I scan and trade every single day in the market. I keep it simple. Swing trades. I don't reinvent the wheel. I like to trade technology stocks that are above medium cap. Sometimes I'll dip into mid-cap stocks, but large, mid-cap tech stocks that's set up around the 50 MA. Here you can see this is a pattern I'm always interested in. A name like AMD that's compressing around the 50 MA, and it's building a high and tight formation. This is what leads to continuations. Okay, you see it there. Here it is on Tesla. Tesla formed a tight constructed pattern around the 50 MA, and it led to a move from 187 to 230. All right, here it is on Tesla again. Here it is on Google, 165 to 180. Guys, if you want to learn to trade my 50 MA consolidation pattern, just shoot me a message, like this video, and I'll send you the full PDF breakdown of my bread and butter 50 MA setup. I'll show you exactly what it takes to fit the A+ criteria. And this is a model that hits it over 80% when you're checking those boxes. But keep watching these videos, because every video, again, it's not financial advice. It's strictly my opinions and my thought process when I'm scanning and I'm viewing these stocks. But again, this is a setup that works for me. I've been able to find consistent profitability in the markets by trading these patterns. And I'm here to help you guys do the exact same. So shoot any questions that you might have, just send them our way. And peace, guys. Have a great Tuesday, and I'll talk to you tomorrow.